All good. So we're expecting Carole, Irene to... Hi, Andy, how are you?
Very good, Diala. How are you doing?
Good, good.
So I purposely turned on so Ahmed can see the beautiful weather outside.
Oh, good. You can see the sunlight reflecting in.
It's the best time of year.
It is, definitely, definitely. And Dubai is open and open for business. So those who want to venture out can take advantage, certainly.
Yeah, I usually go in December actually, so hopefully soon.
Inshallah, inshallah. I just need to get Emma. Can I just have a clock here just to know what time it is? Yeah, my phone is in my. Yeah, great. Okay, I think we can get going now. Is Carole? Do we have Carole with us?
Yes, but I'm having issue with my camera. Just 2 minutes.
Yeah, I was having issues with my camera as well earlier.
I don't know why. It's the first time ever.
I will just get my. No clock. Great. Okay. Okay, fantastic. Right. Okay, well, we can get started, Carole, and then if you get your camera working, we would love to see your beautiful face once you can join us. I think
I may have to disconnect because I
and start to connect again. Okay. Okay. And we're back. Okay. Right. Okay, well, we'll get started, and Carole will hopefully log in again with us, one of our guests today. Well, welcome everybody. I'd like to, good morning, welcome to the Daily Energy Markets Forum, where every morning here, hosted out of the Middle East, we take a look at the energy markets and what they're doing. And I'm delighted today to be joined by our three regular speakers, Mr. Ahmed Mahdi from the Oxford Institute for Energy Studies, Mr. Andy Laven, CEO of Sahara Energy Resources, and Dr. Carole Nakhle will be CEO of Crystol Energy, will be joining us again soon. So let's get started. Gentlemen, I'd like to actually put this question to everybody. Obviously, since we last spoke a week ago on this program to you, we've had OPEC announce what they're planning to start doing in January. They kept the market in suspense and surprised people to an extent. Andy, I'll go to you first. Was it a surprise, this 500,000 barrel increase in January, this sort of month-by-month approach that OPEC seems to be proposing to take in 2021?
So I don't think we should be surprised by anything in 21. I think we're going to see some major surprises. The challenge for OPEC is how do they increase their production and not push markets down? Because clearly what they want to do is they want to generate more revenue. And so actually a slow increase is the best thing they can probably do. Their challenge is that the world expects to be told what they're going to do, which of course, if you're in their situation, is the last thing you want to do. You'd like just to be able to slowly doing it under the radar screen, and you know, it's kind of like, so they'd like to do it after the markets have closed on a Friday, so none of the newspapers pick it up. But they can't. They're OPEC, and therefore a slow, pragmatic approach to me has to be the best. And I would not be surprised if they start to see markets moving in the wrong direction, that we start to see them saying, well, you know, maybe it won't be quite 500, we'll do it slower and we'll keep kind of see what's happening.
Okay, well, I mean, we've seen how the markets reacted so far, you know, at the end of last week. It's kind of, it's calmed down a little bit from the sort of, you know, we had this sort of prices going up pretty much consistently for 3-4 weeks in November. And then after the announcement last week, a little bit of it tapered down a little bit. Not a huge, obviously, difference with prices this week, but how has the market absorbed that decision from a price point of view?
Quite frankly, I think OPEC's decisions, unless they do something of a significant magnitude, are actually not what everybody's focused on. Many of the speakers have actually pointed out, and I totally believe that it to be true, that the issue we're in is a demand issue. It's not a supply issue. It could become a supply issue, and that is what OPEC need to be very careful of. It's a demand issue, and there are some ongoing concerns around demand.
Okay, well, I'd like to just, before we get to demand, and obviously that is the key question now and into next year, and supply can be controlled, demand cannot be, as one would argue. Ahmed, just to go to you, and just sticking with this sort of new OPEC policy style or strategy as we can see it, this sort of month to month, we've got obviously some countries within the group who have IOC contracts and IOC partnerships, obviously, and that impacts obviously their commitments to those IOCs, the country's commitments to the IOCs, with cuts or with increases in volume. A lot of those who do have partnerships have already committed, for example, January volumes. So Ahmed, with this sort of announcement last week, you know, they're tied in already, these certain producers, to what they had promised to deliver in January, probably above perhaps what their quotas are going to be. So where does that leave them when it comes to February? And has that fueled the recent discord within the group, do you think?
Good morning, Diala and everyone. So just to start with the point that, in fact, the OPEC, so far, I mean, I think one point is that actually compliance has actually been quite strong, and in fact, the decision, in fact, was quite a good outcome for OPEC. I think in the end, the fact that they're going to be meeting on this monthly basis, you could argue is sort of an attempt at micromanaging, but at least it shows that they're able to adjust on a monthly basis. In terms of what the market was pricing in before the outcome, I mean, certainly a rollover, and so a 500,000 barrel increase can be absorbed by the market, and prices reflected that. In terms of you're right that there was a mismatch in timing between the meeting and January trading. However, you know, just recently you saw that, you know, with ADNOC, for example, with its term customers notifying them about a cut to, for example, Murban and some of the other grades as well, and that led to some sort of not I wouldn't call it panic, but I would say that there was certainly a lot of scrambled calls being made in recent days to secure some spot cargoes as well. So I think actually it's not as chaotic perhaps as some would say.
Okay, I mean, just to pick on your point on compliance, you mentioned it's been quite good. November compliance, I think, was about 100%. There's a few different figures out there. But just to focus in a bit on Iraq, obviously, because it's been one of the countries which has been sort of watched for its compliance, along with Nigeria and one or two others. And it's had the challenge of, obviously, it has its partnerships with the IOCs as well. And it's sort of tied into this compensatory formula where if they're cutting, they have to compensate the IOCs. How has Iraq taken sort of, is the new, I suppose, strategy of OPEC favorable to a country like Iraq or not?
Yeah, so I think that it's a good point. I think it's often one that's not really talked about very much. But I mean, basically, Iraq and the UAE are the two countries which obviously have very important IOC partners, and that complicates cuts to a certain extent. With Iraq, I mean, just for the audience, I think it's useful just to throw some numbers out there. So obviously their agreed supply baseline is around, I think, 4.65 million barrels, and effectively their adjustment has to be made just just around about 800,000 or so. I mean, so far they've produced about 100 to 110,000 barrels a day above the May to October quota. In terms of the relationship with IOCs, yes, it is important, primarily because, well, two reasons. One is effectively that IOCs have to be compensated for their curtailed volumes. So that's obviously one factor. And also the second factor really is around the fact that their equity liftings as well, basically under a lower oil price environment, means that they receive more crude as part of their quarterly invoices, basically. However, the negotiations have actually shifted since May, one where really the Iraqi oil ministry didn't really have a portfolio strategy, because the challenge when you have IOCs is that they all have different OPEX and CAPEX, and really, you know, for the Iraqis, the challenges is that, well, which fields do we cut from? You know, the ones, with, for example, with higher costs versus better crude, transportation. So all of these these costs have to be taken into consideration based upon how you remunerate these IOCs. However, so far, I think that just one final point is that I think one despite the focus on compensation cuts, I think we can't ignore the fact that compliance has been strong. October, there was a slight glitch where they overproduced slightly, and November, the November exports did fall, but that wasn't because of necessarily pressure from OPEC, but just in fact bad weather in Basra. So generally, I think the question is going to be now, what are the downside risks for Iraq into 2021? And we can talk about that later, but I think maybe you've got the issue of how to finance the fiscal deficit, you know, with central bank borrowing running a bit dry into next year. You've got potentially a currency devaluation on the books for Iraq. You've got the problem of getting the KRG on board to meet the cuts. So, but nevertheless, you know, the recent OPEC agreement does put compensation cuts a bit more in the spotlight for Iraq.
Yeah. Okay, thanks, Ahmed. Do we have Carole back? I'm not sure. Carole, can you hear us?
Yes,
Have you joined us? Oh, you're back? Okay, hi, Carole.
From the beginning I was, yeah, it's okay.
Okay, and we can see you. Sorry, it didn't
It's good to see you, Diana.
Welcome, Doctor. Hi, how are you, Carole? Good to see you. I was just getting Andy and Ahmed's take on the OPEC announcement last week that you know was made, obviously, of this graduated increase. Just to get your take on that, and perhaps a bit of perspective in terms of Libyan crude within that. Obviously, it's not part of the agreement. It's not subject to those quotas, Libya at the moment, but we continue to see Libyan crude steady. I think it was about 1 million in November, 1 million barrels a day. Carole, if you can give us your take on that, whether you're hopeful that that sort of level will be maintained from Libyan crude. You've pointed out in the past on this program that there's always a question mark because of politics on where that's going, but how is that impacting the market and people's belief that that is actually now a permanent amount of oil on as part of this OPEC group?
You know, and economists are always tell you on one hand and on the other hand. But look, when it comes to the market direction, I know the market is still looking for a firm direction for next year. But when it comes to OPEC, I think it's heading in the right direction because it jumped up to, for Brent, let's say, exceeded $48 a barrel, and seems to be holding steady there, despite the increase in Libyan output and despite OPEC's decision to put back in the market 500,000 barrels a day. So in that respect, the market seems to be heading in the right direction for OPEC. But this is, I would say, where the good story ends, because it's not coming cheap, it's not coming easy. There's a lot of negotiations. I know you can look at this monthly monitoring as a good step to keep a close eye on the cheaters and maintain discipline, but could also be a way of buying time. And in my opinion, because of the lack of consensus, it's also like chasing the market. So you're not really in the driver's seat. You're simply reacting to monthly, very short-term changes in market conditions. And I'm not sure this is a good position to be in, because you have to take a longer-term perspective. I mean, you mentioned the relationship with IOCs, but also I'm thinking about the bigger picture of the governments where these national oil companies are sitting. the planning for their budgets for next year and beyond that, especially at a time where these budgets are being squeezed. Now, going back to your question on Libya, you see, I remain skeptical. I know that if you look at Libya's production, you can see this massive dip and then a very fast recovery. But again, Libya's production has been on a roller coaster. Libya is not about not having oil. I mean, they have plenty of oil and really cheap oil around and very good quality oil, so quite in demand. But it's being driven by the political situation in Libya. And so far, we don't have a firm commitment from the deeply fragmented political parties that the kind of ceasefire or peace agreement that we have is going to be long lasting. And mind you, it's not just about Libya. There are bigger forces at work in Libya from neighboring countries and from international community. And that's why I don't see the situation stabilizing for a long time. So there will still be a big question mark about the Libyan oil production. But so far it was an impressive recovery. Whether that will be sustained, we'll see in the coming few months for the new year.
Yeah. Okay. Well, thanks, Carole. Well, and, and again, that's the supply side, as we've said, and that can be and is being controlled, as we've seen even more so now by OPEC with its sort of announced month-to-month, step-by-step monitoring. Let's talk a bit about demand. Andy, you mentioned it earlier, and of course that has been the big question mark and continues to sort of be an unknown of sorts. We've had now the vaccine. First woman in the world taking the Pfizer vaccine yesterday, I believe, and I mean, one could argue that, whereas about a month ago, the market was expecting the vaccine positive impact to come in perhaps in the second half, to really hit the market in the second half of next year. We're now seeing that it's starting to be taken, and we're expecting perhaps to see, a positive demand impact on economies from that sooner, perhaps, as soon as the second quarter. Andy, your take on that in terms of that positive side of the news, and at the same time we have companies like Fitch still giving rather, negative demand outlooks for next year, being very cautious on sort of the long-term economic impacts of what we've experienced this year. So where do we find the balance then, and what's demand looking like in real terms?
So I think it's a symptom of buy the room and sell the fact. The reality is the world is an enormous place, and for the vaccine to really have the impact in any way, like, for example, we have in terms of smallpox and measles, you're going to have to vaccinate an inordinate number of people, okay? And I think we've got some very early signs that everybody's kind of hung on to and say, yay, great, we've started. Yeah, that's 1 out of several billion people that need to be vaccinated. So I think the reality is the market is saying, good, we can now see the light at the end of the tunnel. It is really there. The problem is, and somebody else, I think it might even be Sean, said this some time ago, we're not quite sure how close the end of the tunnel is. We are going to see, I would predict we will see hiccups in terms of the distribution of vaccine. Biden said yesterday he's going to do 100 million vaccinations in the first 100 days. That's an enormous amount of vaccine to find and get distributed. And what we'll see is good news being talked about, and then we'll start to see the reality. And you saw that in the UK. You saw them talk about Pfizer. You saw them talk about 800,000 doses. Then you saw them talk about 10 million. And then in the superscript, it was kind of like, yeah, and it may take us into kind of sometime later next year to get all of those doses of vaccine, et cetera, et cetera. So great news, but it's going to be a while until it actually comes through. So you've got a different long-term and a short-term view.
Yeah, and of course, and we're not going to put it up right now, but we do have a survey question coming up in a few minutes, which is addressing actually the US vaccine program, and a news article that we have in our bulletin today about questions over whether Trump ordered enough or didn't, and we'll put that up for our readers and for everybody, our viewers, in a few minutes. In terms of again, going back to the demand outlook, I mean, you can't have a conversation without mentioning China. Obviously, that has been what's held up Asia, and China specifically, and India to an extent, has held up prices in the market and demand this year and in the past quarter specifically. Carole, just back to you on that. Does that continue to be the sort of staple, reliable obviously outlet and destination for the first quarter, at least second quarter. We're going to have European lockdowns on and off probably throughout the next few months. The US, we wait and see what Biden's going to do. Asia's looking pretty positive. Chinese demand, record imports in November. What's the outlook looking for the first quarter there?
First of all, let me just add to what Andy was saying about the bottlenecks. I am not too worried about the bottlenecks for the distribution of the vaccine because, yes, there will always be bottlenecks, as we saw earlier this year with the safety gears and the availability of masks and hand sanitizers, and it got resolved more or less pretty quickly if you look at it from today's perspective. And the same thing with vaccines, the bottlenecks will be tackled. Mind you, something new, but the supply chain will be able to accommodate. I'm not doubting that. But what my doubts about the impact of the vaccine on demand outlook and demand, I'm not talking here only about oil demand, we're talking about also economic growth, is not going to be massively different from what we are seeing today for something I said before, because most of the forecasting agencies already factored in the availability of a vaccine from the second half, let's say, of next year onwards. So in terms of economic forecast, that will not change drastically because now we have the vaccines rolled out. What we're going to see is that, as we said before, is that the V-shaped recovery has been delayed because they accommodated this kind of bottlenecks and distribution and mass immunization, etc. Now, with respect to economic growth and the boost in Asian economies, I don't think this is going to be reversed. So we're not going to see this kind of W-shaped recovery, mind you, because Asia was first hit by the virus and the first to really I wouldn't say come up entirely, but they did a pretty good job in terms of getting the virus under control. But again, they are starting from a very low base. So whatever percentages we are referring to today, they look impressive, but we are starting from a very low base. That said, they will maintain their growth and their strengths for next year.
Okay, thanks, Carole. Ahmed, just back to you on the demand picture and just going west again to the US. Looking at supply and demand a little bit at America. Basically, obviously, we've seen demand severely hit this year in the US, along with Europe, obviously, jet fuel, particularly looking at sort of the product side of things. But in terms of US production and supply there, with the OPEC, with the new sort of OPEC strategy and thinking, does that sort of give a bit of a more positive outlook for US production next year? And what's expected from that? Obviously, they're supporting prices. The more they support prices, the more shale has a chance of coming back. But where's the outlook for US production coming back next year? And where is that in OPEC's thinking, or is it at all?
Yeah, absolutely. I think that actually last week there was a very interesting discussion about the specific topic of the US. And I think actually a couple of points can be made. Firstly, that the sensitivity to, say, a couple of dollars makes all the difference to the US. So actually, with WTI above 45, for example, in terms of with the DOC inventory in place and also fracking of uncompleted wells, that does pose an issue. And certainly, so far, we're starting to see, in fact, the resilience of US shale. So there is still an argument out there that despite the questions around the capital cycle with US shale, that with all the indicators so far this year being that with growing consolidation and greater resilience in the US shale patch, that in fact it still poses an issue for OPEC going forward. However, at the same time, there will perhaps be a moderation on that growth, and so the timetable for the US shale plateauing, for example, has been brought forward, and so that is a factor in terms of what the US supply curve begins to look like going forward.
Okay, and let me just stop you there and then let's look at the US demand. We had this week, yesterday, the API figures come out, stockpile figures, and more coming out today from the EIA, I believe. But again, a slight surprise for the markets yesterday with stockpiles increasing. So obviously negative for demand indications. Did that surprise the market? Andy, actually, I'll go to you on that with the stockpile. Did that surprise the market at this particular stage in the game? I think expectations were the other way around, having seen a draw recently.
I think the stocks are going up and down seemingly without any cause for us to be worried about. I think, in all honesty, I think we're going to see lots of almost micro local issues with demand going up and down. And then we need to be very careful we don't draw any conclusions from what is a short-term impact. I mean, I read today that gasoline demand is like at 28% or something ridiculously lower than it's ever been before over Thanksgiving. And that's kind of a real short-term impact. So I think the reality is today's market, and Omar's been pushing this a lot, you need to be looking at the long term. What do the long-term macroeconomics tell you? What are the long-term signals? If you get pulled into, oh, we've got a draw, well, maybe it was just kind of timing, or we've got a build, oh, maybe it was just timing. So to me, the short term is just noise at the moment.
Okay, well, let's look at more the long term, as in next year. We've got, I'd like Irene to bring up the survey question, please, for us. And this is building on the news yesterday that America and the US, Trump didn't order enough vaccines. Supposedly, one of his ex-employees who's now with Pfizer, with the Pfizer board, is confirming that that's true. He didn't order enough, and now he's trying to reverse that again. But the survey question is addressing that, i.e. what impact if the US doesn't get more than the 100 million that it's pre-ordered, which is not enough really to start injecting half of its population in the first half of next year. If it doesn't get that, what would be the impact on the average price of Brent next year? I.e., if it can't start rolling out the vaccine fully in the second quarter and has to delay that to the end of the year, will the impact be that the average price of Brent drops by up to $2, up to $5, or between $5 and $10? So we'd like to get everybody's view on that and have a look at the results in a couple of minutes. What impact will that have on prices? From a US, obviously, demand and economy getting back on track point of view. Carole, I'd like to go to you just to talk a little bit more about the US and Trump's in his final few weeks, and there seems to have been some positive news from the governments there, the houses of government, that the stimulus bill or stimulus deal is closer to being reached. There was a bit of a stymieing effect a few weeks ago, but now they seem to be indicating that there may be some stimulus before Christmas. What are your views on that? And if we do reach some kind of deal, again, expected or not, and what impact will it have on the markets?
Historically, if you look at the US experience, when they have these kind of disputes, they end up, it may take a while, but at the end, they end up resolving it because it's nobody's interest to delay further the crisis and not supporting economic growth, especially that there is consensus today that the economy still needs support from the government or fiscal stimulus in the technical language. Whether it will happen before Christmas, so we're talking what is today. So really less than maybe 10 days from now or 2 weeks from now. I don't know, that is perhaps optimistic, but we can expect a stimulus, albeit perhaps of a smaller scale, because you may not need the same large scale that was talked about earlier this year. Most likely, maybe it will take place next year, now that the elections are over, because before the parties were trying to score political points against each other. But now that is out of the way, I think it's everybody's interest to see the economy recovering, and that will take place probably next year. I don't know. I think it's too optimistic to expect it before Christmas. It's just too short notice. But let's see. The Americans always surprise us.
And your view on that, and assuming whether we get it before Christmas or not, that we're going to have more stimulus come the first quarter in the US and in Europe. Europe also made a few fresh announcements this week about its plans. The European Central Bank, stimulus is here to stay. Is that something that the markets, Andy, have already assumed? That's it. It's the new way of doing things. The opposite would be what would be a shocker to the markets if that stimulus did not continue. And how much is sort of market players taking that into account?
I think certainly in the US, there's a big expectation that some form of stimulus package will go through. My personal opinion is that the closer you get to the end of the year and a new president, the more willing the Democrats are going to be to have some kind of fudge whereby they do something that the Republicans are happy doing, which is much smaller than they want, because it's a stepping stone to a bigger stimulus package in the new year.
Okay, Ahmed, just to look ahead as we wrap up in the next few minutes, week ahead through to the end of the year, really, what are anything to watch out for on the markets, any other announcements or expected sort of disruption, if you like, that we don't see today?
Yeah, absolutely. I mean, actually, this week, with a lot of work, I've been looking at Iraq, obviously, quite closely with the announcement around the prepaid tender, and still following up on as well. Actually, working with clients who are dealing as well at the moment with the new Basra Medium launch in Iraq as well, particularly looking and assisting with the pricing around that.
How is that being impacted by the whole sort of OPEC side of things? Is that sort of running independently?
Really related. It's not related necessarily at all. Actually, it's primarily driven by a sort of de-escalator regime that they're putting in place, and actually just trying to improve. Oh, okay, yeah, you put this up. I was going to talk about this earlier.
There. Okay, the Basra Medium launch.
We probably don't have enough time to talk about this, but I was going to talk a little bit about the Basra Medium launch for next year, and actually, so just I don't think you can see this very clearly, but effectively, I think the key points I wanted to make on the whole Basra Medium launch was about the pricing side of things, and in particular, there we are. In particular, how the difference between basically why they decided to launch this. You know, it was on the books for a number of years. It was done in a. It was meant to be done next year, but in fact, you know, the government has put a bit of pressure on SOMO to get this done before the.
And why is that? Just why is that? Very briefly.
Very briefly, because of well, effectively that they've been losing a bit of money on the compensation, but also it's a new government in place, and there's a bit of political pressure to differentiate themselves as well from the previous administration. But fundamentally, it's also because of getting the new specs more closely aligned with the assay values. So the contractual specs, as you can see, for Basra Light, for example, and the old grade was 34 versus the actual loadings, which is around about 29. So each API degree comes to about 40 cents, and so.
And sorry, just to interrupt you there, Ahmed. And so this has been launched now? Have they actually started?
From January, yes. I mean, effectively, they're now. I mean, basically, the new Basra Medium, the volumes will be about 1 million, mostly from Rumaila and some other lighter fields, and Basra Heavy. You can see, you know, that the actual API versus the contractual API, it's about the same. So we're going to have
to stop you there, Ahmed, on that point, because we've got to get back to our survey just results. If we can bring up the survey results, please, Irene, while we go for closing comments. Carole, in terms of looking forward for you for between now and the end of the year and into early January, what are you watching out for that you haven't got information already? What are the possible sort of anomalies in the market that may come up?
Yeah, first of all, when I looked at the graph, the survey you put, I thought, okay, is there an option? None, because you see, we try to isolate very single events, but actually it's a kind of cocktail, different forces working at the same time, some in different opposing directions. And we should blend all these dynamics together. So maybe, yes, in the US, they won't get their acts together, but China and Asia and maybe Europe, who knows, will get better. But in terms of what I'm looking for, I'm doing something quite unusual, which is looking at the very, very short-term developments and primarily Brexit talks, for instance. And we have the economic data coming out from the UK, I think tomorrow or this week, and that will tell us really whether it's going to be a hard Brexit and whether it's going to make things worse, or how the negotiations are going to take place. So I'm pretty focused on the economic data, and even more so for at the beginning of next year, when the fourth quarter for this year will be published. published. And I'm looking forward to enjoying a peaceful Christmas with no news from OPEC Plus, nor oil market, nor vaccination. I just want to have a peaceful holidays.
Only until the new year, January the 4th, they're meeting again, and will be telling us what they're planning to do next in the next February. We just have a slide up there, which is actually our halftime talk feature interview, which is going to be played just after this session, and you can see there it's with Peter Maguire, CEO of XM Australia. He's making some points there about US shale that we've talked about. Obviously, he's saying it's needing 55 to 60%, and then we'll see a flood of oil into the market. The survey result obviously showed that most people, as you said, Carole, is on balance. Not many think it's going to have a huge price impact, i.e. the demand impact on America of not getting the vaccine. But my suspicion is that probably they'll somehow get those supplies. Things are moving much faster than anyone had anticipated on these vaccine supplies, putting aside distribution issues, which as Andy said, may still resurface. Well, I'm afraid we've run out of time there, but please, I'd like to draw your attention to the halftime talk. Do tune into that. It's a great chat with Peter Maguire. We didn't have time to talk too much about a couple of the other bulletins. There's a nice one there on China, household debt ballooning. So that was kind of an interesting balance to the positive story that we're seeing in China. But please do read on if you're interested. And thank you very much, everybody, for joining us today. Have a good Wednesday, and we will see you all tomorrow. Thanks very much.
Thank you. Bye-bye.
Thank you very much.
Thank you.
Bye-bye.